Hello and welcome, as it is the 19th day of November 2020, a Thursday. My name is Derek. This is the Money Charts channel where, like always, all bets, trades, and of the like, within each his own risk and their own reward. And it's all about pattern and situation recognition. Short answer, it looks like we might be in for that of about a 13% decline in price, or a test of $20.86, and probably a higher decline, or lower than that, maybe 20 even, piercing extra, especially with the move that occurred here on September the 24th. But before that, it was this exact hit pretty much of the first line on August the 12th. And the lines represent from the March situation event lows, and then the most recent highs here, very much near $30. As it's been containing a lot of time just congesting and grinding, and really mainly supporting that of the 2394, but it's not lifting off from this. And to me, long story short, again, it looks like we have a higher probability test that we're going to come down towards this level. For you hit this point, and then you still don't know as it's running up in here. Okay, is 30 the high? Well, the highs and lows are known after the fact. Yes, it is now, because after the fact is it all has had all of this. But there's really been 3 attempts since this high for this market to get going, and that you can even say 4 if you include this one. So maybe 4 attempts. August the 18th. It's breaking out above the 18 average of highs, breaking out above the established resistance on the 13th. But no, and it's the higher load, this key level. And another attempt, 3 days spanning the 28th through that of the 1st of September. Microscopically getting above this level, but it only was there for a day, and then it spent a significant period of time within the correctionary phase, or the 18 average, and significant down day, 10% plus, and then furthermore on the 21st. Thus a retest of this support, and we can see intra-move that on the 2 days of the 21st and the 22nd that it supported it, but it broke down below it, and thus establishing on the 24th a low of $21.81, which is a full dollar above this key level. But then from that point, it's been congesting back and forth. Another attempt to break out higher, especially because it established this resistance here. Ending the 12th of October, finding a higher low here to here, and continuation, but lower highing and not getting above this. Down she goes. So it breaks through this low, test, it gets in between this, not quite, still a decent ways from this. But the big thing was this rally that was November 5th here. It gets above here again, and the major rejection of 7.64% has had just a little bit of a move, but the little bit of a move tells a lot to me, as it highs the more shorter term November 16th, and this rejection back to where it came from. I'd be very surprised now in the short term if this is able to... well, when you look at the Fibonacci, or retracement from the high of 25.15 and the low of what we got right in, well, we're so far in here, but I'd be very surprised if it gets above a 61.8%, if much at all. So therefore, short term, if it does, maybe it can get up another couple percent, but whatever on that. I do think that it's going to most likely look towards that this is that of a failed breakout. And I think the result of that failed breakout would be a test of the $20.86 mark. And then it's like, oh, and now what situation? And as this thing has been going on, it's, weekly time frame, that would be breaking down. Ooh, that's a scary, scary spot. Maybe we could be going down lower. Could be. You never know with these markets. But when you have a situation of a fantastically large move, which it did have, and if you're using the 18, which is something I just randomly decided to do about a decade ago, and I haven't stopped using it because I've loved using it so much, but if you have a significant move and you see a fail a correctionary move, it's not big a concern, because you know a more longer term time frame, hence the monthly, and the Fibonacci lands will be, well, you can see in here that it was way overextended. Not way, but it was overextended. I mean, it's still extending above the 18 highs, but it does mean we have a situation where this has been in a decline, got above it in here, tempting to break out. No, very much a prolonged correctionary phase, but really, why didn't this break down and go down much further? Because if you have this prolonged phase and you go down, you're like, okay, you can at least test some previous support here. Okay, that's what you did. Oh, okay, back in the 18 and breakdown in here. Oh, may have this time frame. No, not quite. And then you have this thing. Oh, so you get above the 18, attempting to break out. You newly rising 18, all that type of stuff. You're in this little but you still got to get above this resistance, of course. And then, the breakdown. Retested the support, and it got below it, but it didn't hold. So it kind of did was another test. So 1, 2, 3, 4 times at this. And then, as it convincingly got above this resistance and this resistance, it established a nice level. So the 18's got a nice new convincing rising point. We can see if we can, you get the numbers on the left-hand side. 18 average of lows on the monthly is in at 1854. And it's rising, so as we go into December, that number should be reaching, well, what was it before? 1787, moving up to 1850, so getting to like 19-ish or so, maybe a little above. And then at that stage, you'd be considering, okay, let's see the correctionary moves. If it's anything like that, well, it's just part of the game, and it's going to be a big move no matter what. And if it doesn't officially touch this in any way, and it breaks higher because of all of the shenanigans on the daily term. I don't know why I said it like that, but basically you see it breaking out above this level, like 26.44. It should be good to go. But at what point did you say it was convincingly breaking above us? I would have said, yeah, see it break like in here, and any of these times, yeah, see it convincingly break above 25.68. It kind of didn't. I mean, it barely got above it. In fact, let's just put a short-term line. I'm going to delete it a bit on this, but let's just put it at that high. And let me just take a look back on the hourly and see how much convincing action it had on that. And I'm looking at this for the first time from this perspective. So after resisting it, it barely gets above it, has a move back to 18, supporting. There's your move, there's your established resistance. There's no it's not even close. And in fact, even breaking above this, you were kind of glad to see this for a little bit because, okay, in fact, what was a little bit ish, what we were glad to see, though, is that you didn't retest 26.12 because you hit this high, came back down. You're like, okay, this is looking good. Maybe we could do things. Okay, breaking it above it. Okay, not so much. Support test, and it really didn't get going in here, of course. But you want to see this level get established well, and then if it were to break above it, you'd be like, okay, now it's a time to take a serious action, and this thing having a big explosive move up. But obviously, quite the exact opposite occurred. And from this move, of course, it was just wowzers. Any type of supports that you see, it's always potential support in every single example until it finally bottomed. That's all it was potential support that failed. And it ended up being that the support that hit was 23.85. Of course, the level that I had drawn in here has played out to be, it really kind of was, and it was continuously furthermore there after that. But as it goes, in conclusion, within this when you look at just a lot of periods through this on the hourly time frame, again, just more reason why I would think that it would be like the safe. If I didn't look at anything on the Fibonacci, I'd be just saying, yeah, it's probably going to come down again. Retest 22. But more times than not, as I showed this from the outset, whenever I see a situation like this, you support immediately, have some time like this in correction. You have a great move in price, which it did. Come back to it, support it. But really don't support it, but kind of do. Support it only in the very short term is what I mean by just saying that way. But you really do like a 50% or middle retracement in here. So you have the middle hit, which it hits, and then you have very good resistance at this, which technically speaking, because of the failed breakout here and failed breakout here, if this ends up going from point high to point low, which would basically be a move to $20 low change, then that would be, yeah, I'd be saying, yep, we came down, support was established this, resisted in here for quite some time, and then it made a convincing move, and it probably would be convincing if it goes down there, to pierce below this, 2033 or even 20 even. I mean, this thing can pierce out, even 1998 or whatever. I myself, if I was trading to buy this, and I'm not, but I'd be probably put a buy order in for, depending on my, if I was a little aggressive, I'd probably go barely above 20, if not even 19, if not even 19 low change or 19 mid change. Really conservative. Oh, I'd probably just do 21 low, like 21.05 or something. But again, this is a spot where if you're trying to play the market to buy the physical, you're really you're ready to buy online, or you're going to point wherever the brick and mortar place that you're going to buy from. This is a gambling game. Okay, do I hold and wait? If you hold and wait and you're right, it goes down here, you can get more silver. It can cost you less. And then if it doesn't, and you're sitting here at a price point at 24 US right now, and then plus, of course, whatever the price is. But you realize if it goes down 11, 12%, your price to buy should do just the same. But in contrast turn, if it goes way back up, you start to see you're going to have to make a decision on the win-loss rate because you have the option. It's like a game show almost as well. But that's the way the game works. Game, show, whatever. But still, with that being said, you have the choice to buy at 24. Could get at this. And then you could be saying, oh, I want to play for much cheaper. Maybe it's going to go break well below 20. I mean, these silver moves can have wild swings. And again, as it goes on the monthly term time frame, we have the 18 average of highs in at $18.54 approaching 19. And then the entirety run of this kilo, which is like 1972, $1.25. About $50. I heard 52. I think I got $50 and a few pennies on my LBMA download of all the price fixings they had. And then back to $3 and change, high change, mid change. Yeah, $3 here, but really $4. Four really realistically even $4 high, like $5. Because you have the support here, goes below it, bit above it. Just congests that. I like to use that word in these markets where you go, you're above it, below it. You can't really fine tune any type of convincing move above or below that level. And it did have that convincing move, of course, at the early part of the new millennium. Kilo, key high, kilo, key high. And the key high was pretty much the same as that. $49.81 is what I figured out. And then it comes back down to like 14 and a small pierce below and congests at around like the 16, 17 mark, which was this level of resistance, this level of support in here. So in turn, I've been saying this about Bitcoin in today's video. I'm going to deem any move that comes up to 50 and that of weak resistance. And maybe you'll have some. Some could be congesting at that level, back and forth, yada yada. And maybe it goes down and makes another higher low. Kilo, $1.25. Kilo, $5. Kilo, yeah, 14, 15, 16, whatever, 16, we'll say. Kilo. So 50 down to what? Heck, you never know. It could be 20. But depends on how long, whatever. Ideally, what would be the best case, and especially as a crypto trader, if cryptos do well, I really hope it does this, is let's congest around here for a while. That's what I'd really, really like to see. So that's at first, this is what I want. What the market does was what the market's going to do. What I'd like to see happen is I like to see it come back down to 20 and be successful support. Maybe it pierces below when it goes to 18, but holding and staying above 20 is the key thing. And then from that point moving forward, maybe spend the next 8 to 20 months where we have a low. Well, it's pretty much, again, support near 20. And maybe we have resistance at about, I'd like to see it a bit higher, actually, though. I'd like to see maybe 32, 34. But either way, a break, either way, right here around this point is still great. And then just chop around there for a little bit and have a couple, 3 more tests of the highs, another couple more tests of the lows, either matching or higher. Maybe build an ascending triangle or matching range level, whatever. And of course, a lot of reason why I say that is because I've been saying this for years, and I still know this to be the case, that I think any silver under $100 an ounce is a great price. With that being said, I mean, you're not going to spend 80, $70 unless there's a weird reason criteria within probably a big numismatic or whatever market. Heck, if I got real silver that was traded 2,500 years ago and it's in good shape, oh my goodness, it's worth a lot. But throwing that, and I don't have anything like that, but I'm just saying, the prices are going to, to me, remain cheap until it's over 100. Then, I mean, I still think it'd be a decent buy. But in looking at long-term analysis, and I think I want to bring up this one. Oh, different Fibonacci. Yeah. Because I think I've already inserted, $130. I knew I had a high level there. One of the things about markets, of charts, is buying on breakouts and such. If you know, I talk about kilo, key high, kilo. You break key high and you make higher high. Where's that higher high going to be? And on the very, very super long term, I mean, I really do believe it's going north above here. So if you're buying as it's breaking, oh, it's 70.37 and you're buying, I'm like, yeah, it's probably a good move. That's what I'd be thinking anyway. Oh, you're buying and it's 84. Okay, what's your plan here? If you're planning for a short-term move, it's a little overextended, I might be saying. Especially because 130 is a key resistance level. But if you're planning to buy 85 go to 130, I mean, 15 plus 30 is 45. You're looking at, a 50, 60% move, and then you maybe got a 2x or 3x fund. And even if you're buying and you're really good at flipping physical at that price, hey, you know what, more power to you, great, yeah. And then you get up to this point, 130, and it's a spot move quick to 130. Just go straight up to that point. Oh, you got no physical. Okay, I've just got question marks in my head to why you don't. I mean, it's been years since, Hidden Secrets of Money's been on the internet, yada, yada. And I really do, I'm really shocked that the information has been available since back in here for how our fiat currency debt system works. I remember Zeitgeist Addendum was putting great stuff out, and Money as Debt, and there's a whole bunch of great early origin stuff. And then even to me, Hidden Secrets of Money is so origin genesis for the wake-up stages of how our fiat currency situation is all set up. But again, straight up move to 130. And don't be surprised if it happens, because I think that's the way it would go. Okay, so you can buy now. There's a damn good chance you could end up seeing your thing fall 50, 65% soon. But hey, that happens because we had big resistance at 50. Big resistance and big support, when broken, can oftentimes become the opposite, thus resistance becoming support. Yeah, it wouldn't surprise me if it happened. Oh, we go to 132.75. And then whatever X period later, no, oh my goodness, if it was less than a year later, oh, we're back down to 50. We're down 36% today. We're down 45% today. That type of capitulation talk, and there'd be fear and silver talk. Talking about, why did I get into silver trade? All the people that bought at 80 and 90 and 100 and even at the 130 number, 125, whatever. What the premiums would be like at that point? Well, we would see. And then, of course, you probably have the support. Then you break the 130 and then go higher. So if you buy at the 130 is what I'm saying. You could have that happen. But what if, say, you come up to 130, there's no resistance? Because I wouldn't. And then it could come down and maybe you get like weak resistance at 130. Maybe all it goes down to is like 80 or 90 or $80 or $90 or something. That could be the case. Or any form of weak resistance. But then if it doesn't find resistance at 130, I'd now be starting to talk probably, we're probably talking about between 4 to 6, 7, 800 as the next key level. Let's have some fun, guys. Anyway, thank you for tuning in. Whatever happens, of course, and have yourself a great day. Bye-bye.